Hello, everybody. It is Tuesday. Yes, Tuesday, January 17th, 2023. Market's about to close. I wanted to do two things today. First of all, I wanted to review the day, but also wanted to give some idea of how I make decisions when it comes to whether or not I'm going to use an aggressive strategy or if I'm gonna be a little more cautious, right? And this is you have to realize that like the hardest part about this is that I hate giving people ideas that they then run out and overuse or use poorly, and then come back and go like, oh, that didn't work at all. I blew up my account, right? So I'm honestly, if anything, I'm a little hesitant to like overshare here. Not because it's some big secret that like you can't figure out on yourself or by yourself or whatever. Like it's nothing like that actually. It's just that a little bit of this require well actually quite a bit of it requires a level of awareness and attention that a lot of us don't like. We're not able to achieve that level on a regular basis, and I fall into this trap myself, right? So I've taken these exact same trade ideas and overused them and like blown up apex evaluations. Like I did it 3 times just last month. So I want to put that disclaimer out there that if you overuse these ideas, you will lose money, right? And in the process of figuring out how do I decide when to get aggressive versus when to slow down, is really really important if you're going to open up if you're going to open up your game a bit. So what people usually recommend is start by learning a system that you have high odds with, that you can rely on, and that you can learn it really well so that you know what to do when you're struggling. Because in the future, once you open up your game and you start looking for more trade ideas, if you make a mistake or go too heavy or go too like aggressive in a situation where you shouldn't be, you need, I mean, it's, you can take a break. Obviously, if you need to step away and be done for the day, that's one solution, right? But another, what you really want eventually is to be able to shift gears from one like high gear, like a really aggressive take every single setup that I find, versus, and then maybe like some medium gears where these setups that have a win rate of X%, I will take under these conditions, but never but not in when those conditions are not present. And then you have your slow gear, which is, I might not get this set up more than a couple times a day, and sometimes it might only set up once or twice, but when it does, I know that I've got a strong win rate. So I'm pretty much, there's rarely a time where I'm not going to take it if it sets up, right? It doesn't matter what your setups are, you need to be able to categorize them by, are they high odds? Are they slow gear, right? Because the high odds stuff is probably not going to show up very often. Whereas the fast gear, they might work really well in certain conditions, and then if you start taking them over and over again when those conditions change, like I said, you'll crash and burn pretty quickly. So, and like I said, I've learned this from personal experience, and still to this day, even with all of this, even with the trade plan that identifies where to switch gears, it's still not hard, unfortunately, to make errors with it. So I just want to, like I said, I think it's worth repeating that. This is not something you want to just, if you're going to attempt to learn some of this, or to do something similar with your trade plan, and try to open up your book and try to find more setups and figure out, I know this works sometimes, but how do I know when to use it? And realize that at first, when you initially start to determine what the parameters might be, what I call filters, but what are you going to look at to decide that yes, it's time to go to a higher gear? You're going to be late getting out of it for a while, right? It took me weeks before I was able to, like, not only know when to switch into the right gear, but also now am getting better at when to switch out of it. And like, just so you know, I mean, here, like today, we didn't have a lot of low odd setups, but I did okay today. I did well today still, even though we didn't have a lot of high odd setups, but there were a couple, and then there were also some other opportunities in both directions to take some lower odds trades earlier in the day. I didn't trade the afternoon session; it was really slow, but I just want to demonstrate that, like, once you know what you're doing with the high odds stuff, the important thing to do before you just start taking more trades or learning more setups and just taking them, you need to know when to filter out the lower odds trades and go back to your core high odds setup. So for those of you who are in the trade room with me, the trade and perform room, you'll I'm sure you understand what I'm saying. Like, we have when people first come into the room, my coach Simon, who you can get a hold of at trade letter n word perform at gmail.com, and ask for a 5 free day pass to the room if you want. But the first thing he always does is he teaches people the high odds trades, the ones that pretty much everybody will take. Most of the time when they set up, there are some conditions where even those trades are off limits because it's just not tradable. Like, the price action is just not good enough to expect anything. We're not getting any rotation. There's no range. It's too slow. Or it can be too fast, and maybe due to like a news event, right? Like, he does not recommend trading the New York Open or holding trades over economic releases, right? So, like, there are times when it's just a no trade. There is no trade that I would take because I'm unable to manage risk. And with futures, managing risk is super important because you're using a lot of leverage. So that's where we start as new traders in the room. But then as you do private coaching with Simon and learn more about how the algo works, you can start back testing some new trades and practicing them, so that you know how they set up. But it has taken me a while, like I said, to figure out when to use those trades and when not to. So I'm going to try to share with you some of the ways I am using to better filter out. Now, keep in mind, there's always going to be stops, right? I want to make that perfectly clear. I'm not at all suggesting that if you do XYZ that you won't get stopped out anymore. That's not a thing. And if someone suggests that they can help you, like, literally avoid 100% of stops, like, it's probably not a real system, because it's a probabilistic game. So recognize that regardless of your win rate or any individual trades win rate, like, past performance is not indicative of future results, right? We don't have any There's no way to know that just because it worked 72% of the time last week, that it'll work 72% of the time this week. It might work 50% of the time this week. And then maybe next week it'll go to 80%. You don't know, right? But we do have that past performance to help us like compare different trades and see how things worked in the past. And then it becomes up to us really to make that decision of are the conditions right to apply those trade setups. So we're going to talk a lot about different conditions, and I'm going to try to stay consistent with my lingo as best I can. I know that there's a lot of jargon, and I apologize for all of the signals and the colors and all that stuff. It literally is overwhelming if you try to absorb all of it. You'll just go blue in the face when you try to look at every single bar. Recognize that's not actually necessary. You don't have to know what every single signal means or interpret what's happening in the market from bar to bar. That's actually not necessary. Okay, but what is necessary is knowing how the patterns that we are watching for, how they set up and where they need to be able to be relevant to us. And what you're going to find is, even though a lot of this stuff is kind of complex, complex in the sense that like there's lots of steps of, is X doing this, is Y doing that, right? With the result of that, because of all those steps, it means that you can do this kind of systematically. So you're going to find that on my screens there's a lot of colors and signals and lines and stuff like that we're not actually using today, right? And so don't be totally overwhelmed because there's like, oh, I don't know what an orange bar means. Like you don't need to know. It's, believe it or not, like I just want to demonstrate that with a system where everything is coded for you, so you know that certain conditions exist, you can start to see these patterns. And even if you're not using the trade and perform algo, or if you have the trade and perform algo but you don't have the extra setup or studies that I've added, you can still do this with really any system. It's just a matter of recognizing some basic repeating patterns, and a lot of them, while the entry won't be the same, the filters are not going to be totally specific to the trade and perform algo. So like I said, if you're not in the room and you can get past the complexity of all of the signals and just what's on the screen, you will hopefully gain like just some ideas about how to think about these kind of things. If you are in the room, great, you're gonna learn a ton, right? But if you're not, like I said, just don't be overwhelmed. So we're gonna look at a picture. This is the NASDAQ 24 tick Renko chart for today, live. They just closed 10 minutes ago, so they're gonna settle in 5 minutes, but it'll still be ticking away here. And then there's some other charts in the back. We're just gonna look at one for right now because I just want to point out some differences between the trade and perform algo and then the algo that we're going to look at that has some extra signals. So this is the algo that we use in the room to identify execution signals and to help us analyze the market. Like I said, lots and lots of moving parts. Not important that you know what they all mean, just to get familiar with the idea that every one of these signals is indicating to me that certain conditions are present, and if through repetition you start to recognize patterns. And an example of a simple pattern that I like to talk about a lot is a pink bar followed by a star, or a purple bar that is followed by a star on the bottom of the market. Now the location has to be right, and you want other filters to know that it's time to go to trade in that direction. But if you were bearish during this point for any reason and you had the algo, you would see that simple pattern set up here and then get you whatever that is. I guess it's only like 25 points. It has not been moving very much today, but oh no, sorry, 125. Okay, that makes more sense. So yeah, it's with these two trades here, I'd probably hit my daily goal if I was trading my regular size. To be honest, if you nailed them both, you'd be in pretty good shape. So, but you'd need to know that you were looking for bearish trades here, and that is something that a lot of people don't know how to do. Like, how would I know that it's bearish? It doesn't look very bearish, and so and you're not going to catch all of them, right? Then on the other side, if you have a bullish read, if you can find a purple bar followed by a star, that would be another example of what we call a 2-bar combo. So you can see when it's neutral, the purple bar immediately followed by the star may not go very far, right? This one, whoops, that's the wrong tool. I don't want this one. So this one, for instance, triggered at 11.5, 10.50, let's say, because you probably wouldn't get in right when it closed. Maybe you'd get in, if you use like a stop order, you get it at maybe 11.5, 11. But you could also buy the pullback if you want. But that one goes all the way to 11.5, 39. So it's not 40 points, but I mean, or not 30 points, but more than 20, right? And then your risk on that is under the bar with a star, and that would be 11.4, 80, let's say 83, just to give us, so that's, not, it's a less than 20 point stop usually it's like 17 or 18. And in this case, gave you a MFE of like, depending on where you entered, at least 25, right? So, good risk reward, even though the market's actually rolling over. Now that's not a very good example because it's like at the close and all that stuff, but the pattern's the same. But what you'll see is if you also line it up with a low like this, purple bar plus star, and then it's got some other signals on there to help filter, nail this one, and your entry here is, let's see here, let's say 41, just to make the math easier, and we'll say 10, or 310, right? So I mean, I'm looking at the 40 tick. I was like, that's a huge stop. What's up with that? Or we're looking at the wrong chart. But this is fractal, right? So if you were able to take that big of a stop, which you normally wouldn't, I was like, why is that? Why was that other one so big too? Yeah, I'm not doing my math right in my head. So, but still, you can see that it still did what it's supposed to do, right? It gave you a really nice extension, actually well more than 1-to-1. You'll find the exact same setups, not in the same places, but the same setups on the 24 tick. I don't know how I switched to the 41. I thought I had the 24 open. My apologies. So here, where the 40 tick, so I'm going to introduce this first idea of using multiple time frames. It actually works out. I wasn't going to do this first, but as long as I made that little error, I'll show you how an example of a filter. So here we said pink bar followed by star. If you actually, I don't even know. This might be a different one than we did. We did this one, right, and this one. It doesn't matter. It doesn't matter really. But let's say it was this. We identified pink bar star on the 40 tick, right? Whoops. Then on the 24 tick, if around the same time, we also had pink bar, orange bar. That is another 2-bar combo. My orange bar is the same thing as Simon's little box, the little white box in the bar. So it's just I color them differently because I can't see them very well when they look like that. So I need to change things a little bit. But you'll see that on the 24 tick, we got a 2-bar combo, right? Pink bar immediately followed by orange bar. Or you can have a bar in between, or 2 bar. Actually, it's usually 2 bars in between, but it has to be, the pink bar here has to be within the range of the purple bar like this. So, and then same here on the 40, right? We had a pink bar with an orange bar, and this one also had a star. So and honestly, even if this wasn't pink, because this one is pink, this pink bar in the range of the star without leaving that range, see how we haven't gotten above it or below it? This is still considered like a combo. That's still good enough. As long as you didn't get under it and come right back again, it's all good. So here you would even know a little bit earlier, right there, that hey, they're setting up bearish on the 40 tick, right? That's not an entry, because if you did take that entry, so you could do it. The problem with this entry is that your stop is like 65 and your entry is, let's say, 40. So it's a 25, 26, 27 point stop instead of a 16, 17, 18 point stop. It's just a lot more risk than most people are willing to take. Does it work? It does. It does work. But you probably have to use micros unless you're cool with dropping like more than a K on every trade with one contract. So I would prefer. I guess it wouldn't be quite a K, but it would be more than I'm willing to risk at the trade size that I'm usually taking. So I suppose if you want to take with like 4 micros, it's not wrong, right? But I want to show you what we usually do. Whoops, I keep doing that. That's used to be where I kept it. What I want to show you is that once that occurs, here we gotta let me fix one thing. So once I know what to do, pull this closer. There we go. Now I can see both of them. Once this occurs, which is at 11,440 on the higher time frame, right? So we'll put the bar or the line there. So it's not perfect, but you'll get the idea in a sec. Oh, do I not have them copy? Oh no, it's right there. It's just covered up by this white line. So 11,4, it should be 40. So why would it be so low? Maybe that's current. It should be right at the bottom of that bar. That's when that forms. I guess it's like 43. So once that forms, what's happening on the 24 tick? Well, in the 24 tick, you can see it was printing a purple bar with a triangle down and then a star up, right? So this is a bullish signal, right? But the higher time frame is producing a bearish signal. So this is an easy way, in my opinion, to filter out some signals. Is that if you're keeping an eye on a higher time frame, it doesn't really matter which one you do, honestly. Like I like the 24 and the 40, but it's really up to you. And then I also look at the 15, and then on ES I use the 6, the 4, and the 10. But that changes depending on how rangy the market is and how fast things are. You can adjust it. It'll work no matter what. But we've got opposite signals on the higher time frame compared to the lower time frame. What that's going to tell me is that this lower time frame trade is probably not the trade that I want to be taking. That this trade may in fact become like cannon fodder for a bigger move down, because that's what usually happens. Is the higher time frame is usually right, at least more often than the smaller one. Now you want some confirmation before you just short it, right? You can't just get into the trade thinking like because remember this here occurs while the bar is forming. You don't even see the star when this one forms. By the time you see this star, you've gotten this pink bar here going the other direction. Okay, so and you obviously don't know where it's going next. But if you can identify that you've already had what's essentially a pink bar star, which is bearish, and that's a higher time frame, plus we're making what we would be making lower highs if this holds, and we're also making lower lows, right? It doesn't mean that this low has to get taken out, but what it would tell me is unless I had divergence or some other form of evidence that this down move might be ending, that I probably want to skip this trade, because the higher time frame is going to have dominance more often than not. Now like I said, there are exceptions to that, but that would be my first inclination. As soon as if I'm thinking I want to be bullish, I want to get bullish, I want to be aggressive, I missed this low, here's my chance to get in. Could it just go? It might. I don't know if it does. I don't really remember. But I don't think it does. But it could. Maybe it does. But the idea is, okay, so it tries. We'll just see. It tries to go. You'd get in at 54 if you took the bullish trade, and you'd be out by 66. Is that an okay trade? It is, right? That's okay. As long as you knew that you were only going for 10 or 15 points because the higher time frame's bearish. There's nothing wrong with taking that trade. But if you're looking for when's the best time to be aggressive, and when's maybe the least best time to be aggressive, like the worst time to be aggressive, you might want to skip the ones that show up, first of all, off the lower rails here. Like, see, that alone suggests that, because remember, the way these work, these rails, the lines, the way these work is if the market's neutral, you're going to see most of the volume occur in between these rails, and then like to a significant amount more of the volume will stay between the orange and the blue when it's neutral. When it's bullish, most of the volume is going to be above the midpoint, which doesn't have a line here, but you can kind of picture it, right? So when it's bullish, you should see most of the volume above that. And those little dashes are where all the volume is in the bar. So it makes sense if you think this is bullish and you like have an idea of where the midpoint was, right? Maybe like that little dash was about where the midpoint was here, and then the midpoint came up here, right? Once it turned here, right? Once we got this I guess this triangle is the first turn. So once we got the turn, we only had one down bar here that was underneath the midpoint, right? And that down bar had a star, suggesting that if we get above him, those sellers might be trapped. So there's reason to be bullish here on this time frame. And you could say, I would love to see what the market does when it comes back there. Because if that guy is trapped, that star, which basically just think about it like an aggressive seller, if he gets trapped and the market comes back here and he buys it in that zone, we can probably catch a ride with him, even if we don't get an apex trap, because that trap trader produces momentum, basically. So my first inclination might be, when I get to this, just knowing that, without looking at the higher time frame, my first inclination here is like, hey, I'm looking for a long. I got purple bar star. I know that that's a long signal. So I should be aggressive here because its momentum's higher, and this is an aggressive trade setup, right? And like I said, if you're not using this system, just think about whatever you do for an aggressive scalp, and replace that here. So it's like a low, and then a lower high, a little pullback, and then a sign of aggression, right? So it's very easy here to overdo it and be like, okay, I'm just gonna buy it because all the volume is above, all the down volume is above the midpoint except for this guy, and this guy's trapped, and that logically makes sense, and it does give you a lift. So there's nothing wrong with doing it as long as you realize that most likely this here is not enough for the market to be confident that this guy is trapped and that momentum's going higher. Usually they have to come back into his range. If it's really, really bullish, they don't always, right? So if you use that as a rule, you will miss trades, and they'll look like this, and it'll just go, and you'll be left behind. And in my opinion, that's okay, because most of the time, this low is getting taken out, and we're going to get something like an apex trap where you bounce right back up again a ton of the time. Whereas where the low on that entry will be in this area, and if you bought this with your stop below that candle, that bar, you are basically getting stopped out at the exact point where you wanted to be a buyer. So whenever that condition exists where you're like, okay, I know I want to be bullish here, but I also identify that this is a little bit too high on compared to the channel, and I haven't really gotten a pullback yet. Is this a good enough pullback, right? I've been told that this is a pretty strong pattern. The easiest way to make a quick decision here, there's two ways, but the easiest way is to look at the higher time frame and say, okay, well, what does the higher time frame say we're doing? And how well are we doing it, right? The higher time frame says we are going lower, right? Lower highs, lower lows, yeah? And you really don't, then we can look back and say, well, are there any trap shorts down here at the lows that might be acting as new support. Well, you got this guy right here who's a big aggressive star, right? And we got over him, and now we're coming back into him, and they found an aggressive trader. That's usually a good sign. So at this point, we should be thinking it's probably neutral. It might not be bullish yet, but it's probably not going to immediately go lower on the higher time frame. They get a little lift. Well, now that you see the pink bar and the star down, they are trying to defend that high. And it's not unlikely, just like I said before, to come under this low and trap back in. And then that's where you want to be a buyer rather than being aggressive and buying the breakout. Because if you're buying this, you're essentially buying this breakout right here. Yet there's no clear resistance that you can actually expect anybody to follow you through on this higher time frame. It's just consolidation and potentially distribution. No, I mean there's ways to get more hints than that just by analyzing every one of these bars. You could, for instance, see that this guy was really aggressive and he was right at the high. And when we traded under him, not surprisingly, his range became resistance, and we started to get aggressive sellers having some success out of that range. Okay, so that would have been your very first hint that it might be bearish if you were paying attention to that. To this star, I say it's misplaced, it's out of place. They belong, where they do well is down here at the lows. I've got too many lines here. Where they do well is down here at support. Where they become a liability is up here at resistance. So the problem now is that they tried to make this support. It was old resistance. They tried to make it new support. They ran into resistance and they sold under it, right? And now they're trying to hold this. So is it potentially going higher? It can, right? It can bounce. But you're going to need, if you ask me, I need more evidence than just this star and this location to say, okay, this high is going to get taken out. I don't have confidence that next rotation is going to the high. And I would need a lot more evidence to think that. My first assumption is wherever this gets to, they're probably going to defend it. And where is it probably going to get to? Well, the natural place to be would, see this one, if you measure this, they pulled back to the, 60, it's just below the 61.8, and we got a response, right? So now let's do it in the opposite direction. I'll do the same thing. Eventually you just kind of see this. And look where they defended. Right there. So now look. See how this aligns with this too? Just like it did over here, right? So I'm not suggesting you just sell it because it made a 61.8 retracement. I'm saying that when they make a 61.8 retracement and a reject, and we have trapped traders up there, lower highs, lower lows, this is not going to hold every time. Sometimes that's going to fail. So if I wanted to filter out which longs I'm going to take, this one would be out. And I think that's a little bit too aggressive. So which one do you take? Well, if it traps underneath this and comes back at it, it's hard not to take it. So for instance, if we traded under this low here and then got a bar back up, it would be because so this low, I don't want to get too deep in the weeds, but this low broke out and closed above an apex to the high, one of these little blue triangles pointing up right here. And we call that supernova status. So usually we're looking for pullbacks to buy. But in my opinion, this pullback is not big enough. It's only 2 bars. It's not in the right location. So I really want to get long in this location down here, right? So if I see this, I'm going to be like, nope, I'm going to skip this long. they come down, and they don't respond. So I'm not just blindly buying it, but I would have only been interested in the long if they had a response here that produced an aggressive reaction and then like got back above this in one bar. So like if this one would have closed bullish, maybe I try that one. But based on just the fact that this low is now making a higher low and we might be coming back up to take liquidity, especially if the bigger picture than this is bullish. But in this case, and it was, but in this case, this 40 tick kept me safe, basically saying, hey, you might see a trade on the smaller time frame, but it's not going to jive with this, right? So now here's the neat thing. You can do the same thing with the smaller time frame. So I've also got a 15 tick. And you can, like I said, you can do this in ES too. So let me find it. Here we go. So I also have a 15 tick. And it's not connected to the, I guess I could put it in there, but I'm just going to put it here so I can find it. So we're going to go back to the same location right here, right? That's where the bulls started to respond. Whoops. What the hell? What did it do? Oh, it jumped to the end. Oh, does it not? Oh, that's annoying. It doesn't stick with me. Okay, so what's the time there? Sorry, guys. I didn't realize that would happen. What? Oh, it does. It's not connected to it. Okay. I'm not going to do it right now. But let me just do this. And then we're going to... I know you don't see the time. So it was like 9 something. We'll find it real quick. It was right there. I see it. So they are connected. It just wasn't acting right. Okay, right there, right, is where we get the buy sign or the... No, wait, that's not it. It's this, where is it? Back here. Where the hell is it? Was I on a different day? I might have been somewhere else. I wasn't paying attention to what actual day I was looking at. I just pulled something up. Oh, was it? Fuck, I don't remember. It doesn't, sorry. It doesn't really matter. We could do it anywhere. I can find another one. But I thought it was like 9 o'clock. Was it? Maybe it was Friday. Damn. I wasn't paying attention to where I was day-wise. Was it Friday? I honestly thought I was on today. So my apologies if I wasn't. If anyone noticed where I was, let me know. Otherwise, I'll just find another one. Because it doesn't have to be the same one. Here, was it? No. Oh, wait, it was here. Right? Didn't it have a blue marker? Wasn't it like... Wasn't that? Okay. Purple bar followed by star. It wasn't this. It was higher on the... Okay. Well, that's okay. Let's find another one. We'll just start from scratch. Sorry about the notes in the chart. Okay. So what I'm looking for is a situation where the 2 time frames, the 15 tick here, doesn't or wait, here. Oh, see, yeah, they are connected. But not by time. Or is it just that small? God, I'm confused. Oh, it's just that zoomed in. See, this one is outside of the window. We just got this new chart book, and it's a little bit different than the way mine is set up. I'm using this one because it's easier to explain. We're going to switch to mine in a minute. I'm going to show you some other cool tricks, but anybody can do this who's in the room, so I just want to show you this first with the familiar algo. So what we need is a situation where the 15 tick looks like it might be turning, but we don't have that evidence on the higher time frame, right? So I'm going to double check and see. Hold on real quick. Sorry. Okay. So let's see what we can find. Can we find one where the 15 tick looked like maybe we were going to turn, but the 24 tick, there we go. Are those, see, but why aren't they lined up? God, that's weird. Are they not in the same time zone? My goodness. Sorry, I gotta double check this because this is just weird. Or else we could just switch to the other one. Chicago. That looks right. And then this one. It's like they're not the same. They're not the same. Okay, so this one should be starting at 17. Damn. Okay, that's annoying. Does that fix it? Yep. No. No, it doesn't. Oh, right here. It should be like 11. See, that's not right. Well, we're gonna switch to mine. Sorry, I don't know. I don't want to fix it, so I'll fix it later. But we'll do it on mine. Let me erase the lines. So I know mine's different, but the concept is gonna be the same, and I know that these are all connected and aligned. So see how this says 13:15, and this says about 13:15. The other one was like an hour or two off, and I don't know why, and I'll figure it out. But this is the one I actually use to trade. I just take the signals from there and put them on these. So the colors and stuff are different, but it's all the same. So let's quick find a situation where the here we can do it this way. So the like we're in a trend, and it looks like we're gonna lift here, like so this. So here's where it's kind of the top of the trend, right? Up here. So the 15 tick is gonna give us more signals, but the bars are smaller. But what that means is that a lot of times the move here might pay you 6 or 8 points, but a move here would pay you 15, let's say. And so you have to recognize that if you get a bullish signal here, all it's really saying is there's a relatively high likelihood that the next 2 bars are going to go in that direction. Well, for instance, here, purple bar followed by a green bar on mine is bullish on that time frame. So here, that would take us from 9150 to 11600, right? So that's actually 11590. Yeah, so that would give you just barely 10 points. Whereas normally, if I'm trading the 24 tick, 10 points is just like my first take profit, and I would expect it to go further. Here, I might just miss that if I was trying to use this to trigger me in to a trade, but I kept my 10-point first take profit stable. I would miss that most likely by like a point, and then it would roll over and it'd be like, what the hell? I thought it was bullish. They pulled back. They gave me a signal and it didn't give me 10 points. It's like, well, it's because you're on this tiny little time frame, right? But if you want to find a time where that's more likely to work, what you need is for the 2 time frames to agree. So let's find a spot, like I said, where they disagree, because I think that's a little bit more useful. So here we want a situation where the 15 tick looks like it's gonna take off. Let's see if I can find a purple bar star. Here we go. So same pattern. Whoops. Purple bar. I know it's got a lot more signals than just this, but it's definitely got a purple bar inside of the range of a star to the right of it, right? Purple bar immediately followed by star, or at least the purple bar is within the range, and we have not gotten below the star low, right? So this combo, if it's bullish, will usually, on this time frame, will usually produce at least 2 bars to the upside. But if on the higher time frame we're not bullish, and that's what you saw before it, and this is what you saw after it, there's literally no signal since here that it didn't even print a bullish bar. And if you look, we have bigger picture, we're trending lower with clearly lower lows, right? And so if you're looking for a spot not to buy, you might want to do it when it's doing this. And so what you definitely don't want to do is jump to the 15 tick now and find, oh, purple bar star, that should be good. I'll just trade on this time frame. And then it starts to lift and it doesn't even close that second bar bullish. And instead it I think just reverses. See that? Comes back to the level and reverses. So I actually have a short signal here. I'll show you in a minute. But I just want to demonstrate that it's really important, if you're going to use multiple time frames, that you identify which one it has precedence. And it's always the bigger one. So if you're trying to decide, should I take this aggressive trade, especially if that aggressive trade is on the smaller time frame, because a lot of these that I'm going to show you in a minute they involve the smaller time frame. It's only relevant if the higher time frame has the same directional like momentum. You can't expect to overcome 24 tick bearishness with a combo on the 15 tick that really is just meant for scalping. That's not going to tell you anything about whether or not this high is going to break. And I think that's a really common misconception. You can't just find any of these setups anywhere and expect the entire market to move on them. They're not always the low and the high. They happen all over the place. And so you want to make sure that they all align, right? So let's make that super clear, because what I'm going to show you now is that some of these setups on this with these extra tools, by using two time frames, and again, you can do it with the 40 tick and the 24 tick if you don't want to mess with the 15. That's cool. It'll just filter out a lot of your trades that you might have taken before or seen before, but weren't sure if you were allowed to take it. I'm not telling you what to trade, but I think the way I do it is if I'm trying to trade the 24 tick and I want to have less stops but be more aggressive, I'll make sure before I take a bullish trade on the 24 tick that I also have bullish conditions on the 40 tick. And if I do, I'll be more aggressive on the 24 tick than I would have been had we not been bullish on the 24 tick. So, or on the 40 tick. So here, we'll do it this way. Watch what happens when the 40 tick starts to get bullish. Where's the low here? We're obviously not going to catch the low. I mean, you might, but let's just assume we missed it. Down here. And then we get a high, a higher low, a higher high, and then supernova, right? We've closed above an apex to the upside after making a significant low. So right there, which is here on the smaller time frame, we are expecting higher to be the result. That's really the first time. Now on this 24 tick, you would have known a tad early, right there. But because here's your low is down here. Oh, actually, you would have known before that. You would have known right there because you had an apex right here. I forgot apex right. So you know already. I want to be bullish. I just need to set up, right? And so now, if you want to filter that and say, well, when can that setup work? Well, the easiest way I can tell you is if you saw it here and you were like, okay, I got an apex, made a low. This is clearly a significant low. There was lots of volume coming into it. And now we closed above that apex to the high, or to the low, the apex to the low at the high of that wave to the low, right? So this here, that rotation produced the low, and then we closed above it, or we made a low. I'm sorry, we made a high, a little dyslexic. Or if we made a high after that significant low and then close above that, that's also fair game. So right there. So if you weren't sure, at this point, you know for sure that if it dips in here and sets up, you'd prefer to be a buyer unless you've got more information that tells you not to be, like from the higher time frame or something. But if you weren't sure, like when can I start looking for more aggressive setups, even with that, well, what you can do is you can say, well, what does the 40 tick look like? Well, the 40 tick, it had an apex way up here. That one has not gotten broken, but it made one here. And so by the time that gets a close above, right there. So now both the 24 tick and the 40 tick are supernova status, is what we call it, right? They're both above the wave to the low, and they closed above the apex to the low. So if we start to get aggressive trades now in this on a pullback, not on a breakout, but on a pullback, we can probably start being we can be a little more aggressive than usual. So I usually want to wait to make sure they've at least tried to pull it back twice, and they definitely have on this smaller time frame. You can use the 15 tick for that too. That's kind of a little secret. If you wanted to get in earlier, you can wait for those 2 waves on 15 tick. It's just you'll just have more stops. But if you've gotten this already, you don't have to worry about counting waves. Okay, so now come back. And now what we'd really love to see is a bullish bar right there. That would be the ideal. And there it is. So I would take that. I don't know if it works, but I would take it, right? And it might stop. I don't remember. Yeah, we get our 10 points, and it looks like it's going to roll over. And it does, right? So it does get us our risk off. It just doesn't go higher like it usually does. So maybe not a perfect example. Now this one, you could say that's a trap on the 40 tick. Shit, that's a try to grab this. That's a trap on the 40 tick. See that? There's an apex here, and it's closing back up. But yet I can take risk, like I'm trading the 24 tick. That's a great trade, in my opinion. Is it always going to take the high? No. But the fact that it's setting up on this time frame as well, and it's supernova on this time frame, but yet you're able, rather than having to take 28 points of risk, you can get in with 16 or something. I'll take that one every day. Even if this one failed completely, I'll take this one. Because this was also supernova, and we got a supernova trap there. So yeah, I'm taking that. Right? And then whatever you lost on your runners here, you make back, right? And then now once this starts to contract, you have to be aware that there's also a higher time frame than the 40. And that's why this gets so confusing, is that like you could technically, if you want, you can go to the 80 tick, you can go to the 100 tick, you can go whatever tick size you want, but eventually you have to think about how the bigger picture looks. And if I zoom out here, I'm not try not to go forward, but if I zoom out here and I look at bigger picture, what we're going to see is on the whatever, if I looked at the 150 tick or something, the low that matters is probably this one. And this pullback was significant on a smaller time frame and then resulted in a lift, probably a supernova trade set up there. This pullback set up a supernova on trade on this time frame. But the fact that there's this other low sitting right near this one, yet is lower, means that there are a ton of stop orders sitting under here, because these two are aligned and the one on the higher time frame is lower than this one. So the chance that that price comes back and tests this eventually is really high. The reason why we don't really worry about that is because on a higher time frame, like that shouldn't keep us from getting our 10 points. So as long as you're aware that when you're trading in this zone here, that you're not really expecting a squeeze on a higher time frame, all good. But if you think you can get here because of a supernova that's set up on the 40 tick, when you have this liquidity sitting right below you, sometimes it'll work, but a lot of times it'll fail eventually, right? So I don't know if it does. Does it eventually roll over? Or I got my face to go straight to the high. Let's see. Look at that. Almost. It takes this liquidity here, and then I bet that low gets taken. Let's see. I honestly have no idea. Nope. Goes right to the high. So did it eventually? It doesn't really matter. I imagine this time it didn't, but it probably will. Usually when you see this is lower, right? If this one's lower, the lower one is where all the liquidity is. Oh, maybe I'm wrong. Maybe this is not, maybe the lower one was on the 40 tick, in which case it's all good. So did they already take that liquidity? Oh, it's really close. No, it's like a tick or two higher. That's really unusual. That is the exception. Usually you're going to sweep this. Oh, unless there's a lower low. Ha! So on the even bigger time frame, there's a lower low than that. Right? So this is just an extended move. Okay. So, and then behind that, is there yet another? Oh my God. Too fast. Okay. So you could go back as far as you want, but I'm seeing that this to this is pretty significant. So on some like daily time frame, that's the low that produced the squeeze, right? And so now on smaller time frames, you can expect these supernovas to work just fine. But on a bigger time frame, what you really want is to pull back underneath one of these more significant ones. And the thing is that this was significant on the 40 tick, and we're trading on the 24, right? So for our purposes, this is great. We have 24 ticks supernova, we have 40 tick supernova. That's all we really need to worry about. What I'm saying is if you are more of a swing trader or you're looking for the swing trade and you only really want to get in the market if there's a chance that you get back up here like today, you may not want to take every supernova trap on the 24 tick. You may want to wait until it's also supernova status, at least on the 40, if not on a higher time frame. And then the chances that you get that push are better. That's all I'm saying. Right, so, oops. Let's see. It doesn't mean that the 10-point trades won't work. It's just that the chances that this low eventually gets repaired is higher. It doesn't have to be today. Right, so this one does just exactly what supernova is supposed to do. It makes its first trap, it lifts. Right, and on the smaller time frame, the one we trade, what that looks like is the trap we just talked about. Or wait, is this the one? Makes a trap. No, and this one. So see, this one failed. And that's okay. That happens. And then, wow. And then this one. No. Did that one? One of these works. So this one gave us 10 points. Is it this one? One of these. There. So this is the apex. That's your trap. Went underneath the apex, came back up, closed inside of it. That one should work. Yeah. Okay. Why am I confident about that? Because on the higher time frame, I think we were looking back here for the other one, but it's the same pattern all the time. It's basically the same pattern all the time. So here you're clearly bullish on the 40 tick, right? So we don't want to immediately think, oh, I think it's bearish now on the 24 tick. Like, probably not, because you've got supernova on the 40 tick. It just squeezed. So what we need is a pullback, and what we don't know is it going to be this trap, or this trap, or this one wasn't a trap, or that one didn't get under, or this trap. That will take more. That sometimes you're not going to know exactly ever which one exactly will be the one. But what you can avoid doing is when 40 tick is not bullish, but 24 tick is, you're going to save yourself some trouble. So like, let's say, does it do it here? I may have to go further back to find a scenario where it does this, but we're looking for a situation where it's not clearly supernova to the upside on the 40 tick, but maybe later today. But the 24 ticks, oh, that is later today. Maybe here. Yeah, we don't have a trap, do we? If that would have trapped, it would be a perfect example. Let's back up a bit. We'll find one. Because there's times where the 24 tick looks pretty darn bullish, but the 40 tick's kind of like questionable whether or not it's still bullish or not. Do we get a clear supernova here? Not really. Like that. This might be a good example. This might work. I'm not sure. So if you looked at this and you're like, okay, we're pretty far from this low. So I'm going to zoom in and just look for a significant low on the 24 tick. I'm going to wait for apex high to get broken and closed above, and then so that we're supernova on the 24 tick. And then I'm going to look for a pullback to buy, right? That's usually our plan. So we come up, we make an apex, we'll make a low, significant low. We make an apex. We make an apex. Do we close above that apex? We do, right there. Close above the apex, so it's technically supernova, right? Okay, let's check on the 40 tick. What's going on over there? Well, on the 40 tick, our significant low is here, right? I think everyone would agree on that. And that high has not been broken. Okay? Unless you back up to an earlier low, but that's not the one we're looking at for the 24 tick. That's this. Back here, right? So from the perspective of this one, it's bullish. But are we gonna be looking for buys down here? Like if we're using on the 24 tick this as our oops, I went too far. If we're using oh no I didn't. Yes I did. if we're using this as our supernova apex on the 24 tick, are we even thinking about buying pullbacks into this range of this wave? No, right? We're assuming that buyers are going to show up before that, and then if we were wrong, we would then stop out and wait for it to come down to that lower low and then see if they trap on it, right? So if you're going to use this one as the significant low, realize that on the 24 tick, by the time you get your supernova status there, right? By the time you get there, which one is it? Too many arrows. 1455. By the time you get here, I'm a little too far ahead. By the time I get here, we look over to the left and we say, well, is it supernova recently on the 40 tick? And really the high is here, and we've just gone down since then, right? So since we started doing our analysis on the 24 tick, it hasn't even made an apex, right? And it's coming off of the high. And how does that high look volume-wise? It's pretty strong, right? That down wave is impulsive. See how different this is compared to this? That's an impulsive wave down. So what that's telling me is on the 40 tick, they are potentially distributing. It doesn't mean this has to be the high, but most likely down moves are going to work because the 40 tick is pushing with a lot of energy to the downside. On the 24 tick, on the other hand, you get this significant low, and then they closed over this high, so you might think, well, I just want to buy a pullback if it traps underneath this. But what you're going to see, it might give you 10 points. I don't know if it does. I don't even know if it triggers. Right here, if this gets a bullish bar. Oh, it doesn't. Oh, it's so close. Yeah, so there. So this would be your high odds setup, right? You got underneath what you, on this time frame, what you saw as a significant low. You broke above the high and then traded under it, and they saved the low. The chances that this gets 10 points is pretty high. But because the 24 tick is not in supernova status, and in fact, it's probably in some sort of a distribution. And if you want to be really technical, what's actually happened is you've made a low and you've closed below that low, which is like a bearish supernova. You should expect rips to get sold. So is it wrong to buy this? Absolutely not. Just know that if you're going to do it and it works, you need to take profits. And if you're filtering trades to try to only get the swing trades, it's actually better just to skip this one and wait for that low on the 40 tick to line up with the trade on the 24 tick. So does this work? It does. It totally works, right? And like I said, I'm not suggesting that it won't, but what I am suggesting is that this high up here is probably not going to get immediately taken. This time it might. But usually we're going to need some more work down here. And we're going to need to take out an apex on the 40 tick before we actually hit it. Now this time, yeah. So see how this low now might get trapped? Yeah. So now this low got trapped. Again, nothing wrong with that trade. I'm not saying it's wrong. Just know your parameters of whether or not that's an okay result for you and how you'd feel if it stopped out more quickly, knowing that it's probably not going to break high a day, right? If that's okay and you're scalping, keep doing it, right? But if that's not the kind of result you're looking for, then you need
this is a really easy way to filter. What I'm going to show you is you can actually do this on the 15 tick and in the other direction for the scalpers, and you can have the same. You can have another filter. So here, this trade now, we need to recognize that this trade is not as good. This trap is not barely as good as this one. Why? Because we've rejected without breaking above this high. Remember, we thought this was supernova, right? We said it was super, and it is. It's supernova on the 24 tick. The whole idea of supernova is that we're supposed to continue higher after pullbacks. That's why we like the supernovas, because not only do they produce high odds trades, but those trades often continue. Well, when we reject at this high, even if you didn't watch the 40 tick, what you have to recognize is now on the 24 tick, we're probably distributing, just like we thought we were on the 40 tick before, right? This actually confirms that bearish bias on the 40 tick. So I'll say it again. Doesn't mean you can't take this trap down here. No. But if you think that you're going to break this, you're probably crazy about that. You're probably not right. And then if you look and you say, well, did we get a close above? If this was a significant low, did we get a close above an apex? We did not. Did we just barely do it? Maybe by a tick, but I probably wouldn't count that. Like that's not encouraging. If you do this and then you rip all the way back to the bottom, like that's not what you want to see. You want to see these hold first and then after a rip maybe come down and test this later. You don't want to see this high get closed above, test higher, fail to break this one and immediately roll over. So for me, this trade would be a no-go. This one, I would be bearish by this point just looking at the 40 tick. Of like my expectations are getting smaller and smaller. So while it might give me 10 points, it doesn't. I would probably skip these. Even this one. I'd probably, unless I see something on the 40 tick and I'm trading like I'm swing trading, I wouldn't touch it. You know, if I'm interested in big moves, I'll just skip all of this because the 40 tick just hasn't really set up yet. So now I want to show you what if we do this on the 15 tick. So we're going to hopefully take the same spot. Now on the 15 tick, this will look like a very significant low. Right? Look at that big down move. Okay. Big down move, right? Significant down move. Now it had decreasing volume, but we'll get into that later. But let's say we thought, okay, that's a pretty significant volume or significant push down. Where is my apex? It's right here. So on a 15 tick, all I have to do to get a supernova is get above that. Now all I have to do is get above this because I made a new one and close above it. Right there. So right here, I'll use the same arrow so I'm confused. Right here, 15 tick says, I want to go higher. Now, the best thing to do is to look at the 24 tick and say, okay, do we have a target where that would make sense? And here, I would say we absolutely have a target. Where is the last apex to the downside? It's way up here, right? Should we expect to break that? No. Just like we didn't expect to break the 40 tick. We also have a breakdown here. That should be our primary target. If we are scalping, and we're going to use the 15 tick to give us a hint that things might be turning, even though we don't have a trade, we have a hint, right? It's not a trade. It's this might set up bullish. Let's start watching closely for a bullish setup. We now have to think about risk reward wherever the trade's going to set up, based on whatever the situation is here. Since we had this breakdown of this apex, that should be our target. So we want to set up down here so we can target that. It would be great if we get a supernova on the 24 tick first. Okay, they go straight to the target. Sometimes that's going to happen. We wouldn't have caught that, right? Unless you were really aggressively buying this, you just, I guess you could have gotten this trap, but without any further information, unless you were trading the 15 tick, you'd wait here and be like, okay, we hit our target. Let's see if we can pull back and I can get the next wave up. Now they might not give us a pullback. Okay, there we go. So now we see we've gotten a trap, right? But we have not gotten supernova, right? So this is not supernova on the 24 tick. So now what we have to do is we have to come back to the 15 tick and we have to say, well, is this supernova still valid? And I'd say yes, it's still valid. We have not traded underneath this significant low. They did push higher. They did not produce an impulse wave down. And now we're back to that area where we confirmed that it was supernova, which is really my primary entry point, my preference. And then we need a setup on the 24 tick. Well, we got an apex trap, purple bar, green bar, got all sorts of reasons to get in here. Got divergence, engulfing bar, right? But a lot of us are skipping this trade because it's not supernova on the 24 tick. In my opinion, if all you care about is getting to your next target, it's actually fine. The only problem with this trade is that you're so darn close to your targets. Because your target was here, but they met it. So now my target basically is these apex. It's the last apex in either direction that's above me. So these are the next ones, like recency-wise, right? So here, if this was your entry, your target's here. Because there's no up apexes, but there is a down apex, right? A recent one. Now we've made a recent one here. So I want to make sure that I have odds to get back to this. And if I do, and I think I do, it's close, but I think I do, I can take this setup, right? And I get it, even though it wasn't supernova. Now what's cool is that that results in a supernova. So now all of a sudden the 24 tick has become bullish, right? Now if you want to further filter this, because it's like I'm scared, I don't want to take any trades if it's not supernova. I don't want to, right? Like, or I only want to do it when the win rate's pretty high. Well, the easiest way to decide, or another easy way to decide whether or not to do it, is make sure that bulls still have dominance in volume. So these are the bull waves, the green ones, and the gray ones are the sell waves, right? So here you can see on the way up, the bulls clearly had all the volume, and the sellers didn't have much. I've added this little dash here, and when we break above that dash, in the very next bar, it's a sign that the other side has gotten dominance. So see here how this one was green, and this bar happened, this dash happened on a green bar. In fact, I think we closed above it there. So the dash is on a green bar, right? Which means it's actually produced by the previous bar. And if we can get a green bar that closes over that dash, it's bullish. The volume, it's not a buy, it's just bullish dominance. If we have bullish dominance, it's gonna help those trades work better. And there's some trades I'm going to show you that don't work unless you have this signal. So you got to understand what this looks like here. If after bullish dominance like this, if you lose the one that's biggest, so this, we have bullish dominance, right? The biggest wave is this one. So if we put a bar underneath, a line, underneath the one with the biggest volume, that low needs to be defended. Otherwise, we don't want to, we can, even if we don't have a bullish volume, we probably don't want to mess with that. Yeah, hold on. Yeah, so we want to be aware of where all the volume is. It's best just like this, where all the volume in the direction that we're trading is at the where like the start of the move and not at the top. This is what we want it to look like, because it means that this level will probably be defended, but if it doesn't, we don't want to be bullish anymore. And you can actually do that on any time frame. So again, we got bullish dominance confirmed here, continued here, didn't quite get it here, so they kind of petered out a little bit. They got some sideways, and then this last move here, bullish dominance happened on that move right there, and then they rolled over on this tiny time frame. Right now, if we put a little line right here, you can see that technically bears closed a bar above the last dash, right? Oh, actually, it happened. You could even say maybe here if you're a little more aggressive, but I'm going to say definitely here, because this one only had 2 bars, so I really want them to have at least 3 bars to count them. But regardless, this wave had bearish dominance. So if you
if you want to be really, really strict, or if you want to be really, really aggressive, wait to make sure that when you get in that you got bullish dominance again. So right there. So see how that, yeah, hold on. This one got above this dash, right? Once you have that bullish dominance on this tiny little time frame, setups on the 24 tick are going to start to work better. Now, in this case, you would have missed this early pullback buy, right? And that's the sacrifice for waiting for that signal, is that you will miss trades. But the good news is if now that you have that bullish dominance, if you get a setup now, chances are on the 24 tick, chances are it will work more often than it won't. Do they trap? They don't. They don't trap. And they get dominance right there. So if your rule was I need bullish dominance, you miss that trade and you just don't lose anything, but you don't win anything. So let me find another one where it might work. Because like I said, if you're going to filter trades, you're going to miss some, right? I don't need that for every trade, but for some of them I do. And primarily the aggressive scalps using the pink bars are the ones that I want to see dominance with. And then the divergence. Those two need dominance in my opinion. So, okay, so here's another example of like a healthy, so see how, all right, on this tiny little time frame, this should be support. Okay, so if I take the low of that, which is here, or so, this should be support. Now, in this case, support was way back here, and that volume was weak compared to the previous volume, right? So what that tells me is that a lot of sellers got in here, and they probably got trapped, which means that we might get a really, really fast squeeze, but most likely it won't hold on a higher time frame than this, because this volume down here was weak. So the market wants to come back in here, sometimes more than once. And the fact that they got trapped here is the only reason we really left so quickly. So let's see, does the market come back? Let me extend this, and let's see if it holds. Now, if it holds, we can start looking for trades. Extend. So let's see, does it come? First of all, does it come back? Didn't say right away, but it should eventually come back and fix it. Oh, that was close. Oh, has it not happened yet? It may not have happened. Like I said, I don't have a lot of info. A lot of data here. So it got close, but it didn't get reached. Really close. It ran into something else. But we can find another one. But that's a cool. Oh, here, I'll show you another one. So that would have been nice if we would have got the setup down there. It just didn't happen, right? But we would eventually expect that that's going to get tested down here. But look what happens when the big volume happens at the top. So see how this is the up wave and all the volumes at the top. Now let's do that same exercise at the bottom. Right? So the idea, what the volume is telling us is that traders at this point, once this gets big, are treating this low as support. So now we're going to extend it, and we're going to say, well, were there sellers trapped below that might give us a scalp? And I'd say, yep. See how the volume went up as price went lower? So they did sell this pretty heavily down here, and they probably did get trapped. So if you can get an aggressive setup to occur up here, once you get that on the 24 tick, obviously, once you get this big volume, it'll probably work. But when I say work, what I mean is that for the short term, you'll come back up to whatever resistance is, which in this case is right here. So you might not have risk reward, but you're probably going to squeeze up to that liquidity. Then you're probably going to come back down here. And if it sets up down there with a trap of the 24 tick, that trade
you want to be only your conservative trades should be used down there. So let me just see. Does this? Well, first of all, does it set up on the 24 tick? Once it gets dominant here. So it gets dominant right there. It gets like really big. For sure by here, it's like the biggest up wave we've seen, right? By this point, definitely. So now, do we have a setup? It might just squeeze right to liquidity. So liquidity is 11.5, 11.25 and above. So what we want is a trap. No, they don't give it to us. So just no trap at all. And then they don't hold this either? They don't hold it. And so once they leave it behind, now it's resistance. Now I don't want to buy down here because these guys got squeezed out and got freed. But we would have known that by looking at this volume, seeing that all the volume's at the highs, and it actually sets up for shorts on the retests. So that, if you get a signal here, that's a good short. Now the same exact thing can be done to the downside. Look how one of these will set up, I promise. This is the bigger wave on the way down, right? All the volumes at the low. Our assumption at that point should be they're making this resistance and they think market's going lower, and it probably will. Your target on a short would be back to here. But if they break above this and it becomes support, it's probably bullish. So they try to defend it, right? Do they get here? Well, first of all, note it sets up as pink bar star, but it's not in the place where you want. We want to take our shorts up here. So none of us are taking this trade, thankfully, because it's not going to work. But if it's set up here, someone might take it right there. If it's set up, it does not. Instead, they break over it. Oh, did that set up? Nope, no setup there. Okay, there. So see that bounce? When this holds as support, where they used to be trapped with big volume below, but we let them go and then came back and it held, that is a beautiful entry. As long as you have an apex above you to target, like that. So that is a buy I would make. It might not work, but that's what I would take. And I would take profits at 10 points and see if I can push it higher. But I think they ran into single prints here. That's why it didn't work. This green is single prints, so that would be the reason not to take it. And it's definitely not in position. See how it's like not down here in the right location? It's pretty aggressive, but it still gives you your 10 points, and it had a chance of going higher. It just didn't here. But the concept should stay the same. Now, does this become resistance now that it's under it? Let's see if it comes back up, what they do. Yeah, that looks like it's going to be resistance. Does not set up. Oh, right there. Pink bar, star. And it's in the right location. Now, you might have taken pink bar, orange bar, but it doesn't go anywhere. And that's just how shorting works. Sometimes you're only going to, I mean, actually, honestly, that's how trading works. But it's not always going to work on your first try. But in this case, they tried to come up and take that. And now, if you want to wait until they get under it and then reject it, that's not wrong, right? So now that they're under it, now if they reject it here, like I'm taking profits already, but if you didn't want to take this short and you're like, okay, if they reject out here and they signal, then I'll take it. Oh, they went above it. I don't know if it sets up. That's not, that's close. Nope. Oh, and they're bouncing off it the other way. So it's a matter of which way you want. Now, if you were paying close attention, you would have seen this. So once this happens, once you get big volume up, you might not want to be shorting anymore, right? Just like we talked about before. And you would have seen that here too, I imagine. Yeah. Right there. So if you're watching closely on the smaller time frame, by the time it gets there and buyers are coming in, it's probably not a short anymore. And then they hold it here, and now it's clear. See how the all the buy waves are bigger than the sell waves. They're all pretty small because it's overnight. Or no, it's not. It's just low volume, I guess. Um, but that location became good for your trade. It was just not so clear from just one time frame which side was going to win. If you look closely at the 15, you probably had opportunities at both sides. If you were willing to take profits quickly, so they took it. You probably could have taken this, right? It might have stopped you out, and then you would have gotten paid on the smaller, tiny little time frame. And then if they reject it, it probably does set up on this time frame. Right there. Well, there's no. It's purple on its own, but yeah, that if it would have been a purple bar, then that would have been a setup. But it didn't. It didn't set up on the way down. I lie. Right here, purple bar, star. I missed it. And you get your tiny little because remember we found that support resistance on the 15 tick, so it's not fair to say that like that should be support and resistance for the higher time frame. It's just support and resistance for that time frame, but the same concept will also exist in the higher one. So if you can find big volume on the wrong end of the move, you can then zoom in and watch the volume on the smaller time frame here. Let me try. Let's do it the right way. Let's find one. So we did that one, right? So let's go back further where I don't know exactly what happens. And we need to find one where it's, so what they're supposed to look like is this. Impulse wave at the beginning has all the volume. That's normal, right? This is probably good resistance. But you don't really know that until here, right? Doesn't mean you can't long. It's just don't expect that to break easily because it's probably resistance until broken, basically. So now if they continue lower and break this low with more volume, and then they get back over that wave, that could potentially be a trap. There we go. So see this? So where's the root of this? It's here, right? So let's mark. It's basically the green line. So if we can break back, we're dealing with that same exact location. But if we can break back above the green line there, the green zone there, they could get trapped. Okay, they got a little bit of volume here. They got to break above that green area though to really trap the big. There we go. Okay, so we get above it, right? We said it was this, the bottom of the green zone was where the start was. They got a big volume wave. They broke through it. Now all of these guys are trapped, whoever shorted down there. And if this becomes support, you can get a relatively quick lift. Now the problem is we've already lifted a ton without any consolidation. So it might not work all that well if it does set up, but generally that would be a sign for me to start looking for trades as long as I still had dominance on the 15 tick. So an example of a trade I might take, a blue dot, which is the divergence. I think on Simon's it's white or yellow. And then if a pink bar follows that, now this one's way too high on the radar, but technically if a pink bar follows that like that, you can buy it. I don't like this because it's so close to resistance. Like the risk reward's horrible. But if that bar would have been a little bit lower, I'd say totally go for it because look at all this volume, and we know the location is good because we've got sellers trapped. It probably still works. Yeah, so you still get your 10 points, right? And these are just scalps, by the way. These aren't swing trades. So now let's see if we can set up down there again. Oh, it looks like it won't. Gave us another. I was hoping for a trap. Now we keep our eye down here, and we want to watch to make sure the sellers don't start getting really big waves because otherwise it can get, it can flip. And you can see here, they've now overtaken it, and now we have one that's clearly lower, right? So now we want to start to be really cautious. See that? Now, if this would have trapped, and I had this, I'd be like, no thanks, I'll skip it, right? We're at resistance. Why? I don't want to be trapping when they have no volume, they have no momentum. So there's the trap. So let's see. Here's the trap. Now this is tricky because technically the bulls have clear dominance on the 24 tick, and the bears did have dominance on the 15 tick. But look how close this is. See how close that is? You have to ask yourself, do you think that the very next bar could potentially break this. You could if it's a trap back in like this, when it's that close, and like you don't have a big impulse move right ahead of you, but instead you just have like a smaller wave. You can probably go ahead and do it as long as you have support here, and we've identified that this bottom should be support. So this one's probably okay. What I don't want to do is take the long here after this huge wave, because look at the difference between where the volume is on the upside versus the volume on the downside on this tiny time frame. I'm going to need to get a huge commitment from buyers to overtake this move here. And so I really shouldn't expect it to go any higher than this, that next apex to the left. So why enter here if that's my target? But if we go low enough that that target's a good target, and that's exactly where it goes basically. But now if we get this, our entries here, our targets remains the same, but our risk is this, right? Like that's worth trying in my opinion. That's worth trying. So let's see. Am I right? Yep. So look, see how it goes basically to this bar here. The apex, the bar with the apex, mine are little purple flags. That's where it gets reversed. Sometimes it's above that, but usually it's right around there. So if you had good odds to enter here and exit here, I'd take it. And you can see, sorry about the fighter planes, you can see that they did produce a volume, a dominant volume. Now you could say like, okay, that's not systematic enough because I don't know about that volume until here, and at that point on the 24 tick, it's too late. And I'd say, yeah, you're probably right. So let me show you another way to do it that gives you an earlier notice. And then I'll probably stop here, other than I'll just show you a couple other pink bark tricks because they're fun, but I don't want this to be too long. So in addition to the Weiss waves, another tool that I'm using that's totally free on Sierra Chart is called the Volume Zone Oscillator. You just go to Studies, go to V, it's already there. Volume Zone Oscillator, right? You add it, you can, I don't change the settings at all. In fact, I'll show you. So I leave the settings exactly like they are originally, but I'm only showing the 40, the negative 40, the 60, the negative 60, and the 0 line. Those are the only ones I care about. I'm hiding everything else. Okay, so I've got 40, 60, negative 40, negative 60, and 0. I'm skipping the smaller ones. I'm not worrying about, oh, and then it's a 14 period. And you can mess around with it and see if there's a better, if you like something else better or whatnot. But what this is going to do, there's going to do two things, or it does two things for me. Number one is it's going to give me really early warnings that basically buyers, or you can use it in the inverse too, but let's just stick with one side for now, that buyers could be taking over momentum. And the very easiest way to show this is to focus on the 0 line here. If you've had, on any time frame, if you've had two spikes like this that are above the 0 line, see that? 1, 2. A real simple way to determine who has control of volume is actually to draw a trend line across those two. They must be above the 0 line, and they have to be spikes like this. And you really want to start with the highest one. So 1, 2, stretch that out. It doesn't have to be perfect, but you'll get the idea. Now, if price can do two things, it has to first of all break over that downtrend line, and then it has to break over the 0 line. Okay, so the first little test is basically here, but it doesn't, if you look here, it's a down wave when it broke. Here, I'll show you. So the very next bar is it's a down wave and it's a down bar right after it. So you don't just buy it, but buyers are trying to get it to turn it already here. It's not time to buy, but it's time to pay attention. So now once you've gotten that, now look, when you break it again, the 0 line, and you're still above this downtrend line. It's even better if you bounce off of it, which it kind of did, but not exactly. But see how it went here? It went above the 0 line right here, right? If the very next bar is pink, you're probably good. In fact, if the very next bar is bullish and all those things are still true, you're above the zero line, you broke above this downtrend line, you can probably start being a little more aggressive. So in this case, we could wait one more time because the next one was not pink or bullish. So here's the next time we got above the zero line. The next one's not bullish, so we can wait. Right there. Gets above the zero line. Again, I'm not just immediately buying it. It's pink. Okay. If this bar has an algo on it, to be honest, pretty much all of them, but yeah, we'll just say any algo for now. You can search a little bit further, and there's actually more filters than that. But like certain of them work better than others. But assuming it's not purple, it's some kind of sign of aggression, like a diamond or a star, or a box or whatever, and you get this exact pattern where you've gotten above the zero line, above the downtrend line, and you've gotten now a pink bar following that apex bar. Usually, the pink bar will have a triangle on it. Okay, that usually will. If it doesn't, it's not that it's wrong. It's just that's kind of how you want it to look. It's just like this. You could probably just scalp here, or for sure you could look to the 24 tick and say if I get any setup, like literally like fast, the ones that work like 50% of the time, it's probably good. At least on this time frame for a scalp, right? You can get 8 to 10 points if you're going to do it with the 15 tick. Now, you can do the same thing with the 24 tick and the 40 tick, and then you can look for bigger moves. But if you're just scalping and you just want to know, like, when can I start buying again? This is a really easy way to do it. Be like, okay, there's my pink bar. It's probably going to go higher the next time it sets up on the 24 tick. This one actually was a setup right at 11,484 because it's a star with divergence, and the buyers have control of volume, which is what this is telling us. So in this case, you could just buy it. But even if that wasn't the case, it's also a trap. That's also a trap. But if it wasn't a signal, I would just wait for the next signal, right? So this one probably just lifts, yeah, and you get a nice little scalp there, right? So how long is that gonna continue? Well, you can do the exact opposite. You can say, well, if I got two spikes to the downside underneath the zero line on the volume zone oscillator, like this, I can draw my trend line, and I can basically say as long as buyers defend that trend line, and if they don't defend the trend line, they at least defend the zero line. That trend, if you will, on that tiny little time frame, that volume trend is probably going to continue. So here you can see we bounced off it a couple times, bounced off of it here, got really high up, and now we broke under it and broke under the zero line. Am I going to buy the next long? Not unless they immediately reject and go higher, in which case I'm probably not going to get set up, right? So now I'm actually thinking short, and this is technically a short signal if you want to scalp, and it goes lower. So once you recognize things like this, you can start kind of opening up and be like, okay, well, which indicators do I want to see before this purple bar with a triangle or before this pink bar with a triangle? And what I'm finding is the ones, the green, the VPOC over VPOC, right? On Simon's, it's the yellow boxes. Oh, that's right. I turned mine orange. Or green, I mean. So on mine, it's a green bar, but it's when the VPOC is above the previous bar. And it makes like I think it's a white box, sorry. On his, it's a white box. And then the engulfing diamonds. Or for sure the divergent bar dots. Those ones work really well. If you still have the old algo setups and you're in the room and you have the speed bars will produce pivots at these points. They won't always produce an immediate drop. So my speed bars are diamonds inside the bar, and I can show you how that sets up if you want. If anyone's using speed bars, happy to show you. It just produces pivots. I don't take them anymore as an entry signal. I've filtered all those out and instead wait for it to come back and pivot into it. But I need this signal or the Weiss waves to confirm that volume is going in the right direction. But look at how deceiving this is. So if all you're using is the Weiss waves, what you might say up here is, look, buyers got aggressive and have more buy volume than sell volume right here. So I should be bullish and buy setups on the 24 tick. Well, that's true, but how long is that true, right? The volume zone oscillator tells me early that, hey, that momentum, that volume momentum you're talking about, it's gone. But the Weiss waves don't tell me that until here. Right? Now, in this case, it didn't make a difference. But in my experience, it can make a difference between taking the trap that sets up or not taking the trap that sets up. Because look, if this would have just been a little bit lower and then the next bar is bullish, like I might make the mistake of taking that trap had I not noticed this. Now here it's obvious, it should be, that they've clearly, sorry, it's here. The sell wave gets bigger than the previous buy wave, right there. Right? So had this trapped, you probably want to skip it. But in this case, I actually knew that that was the case way back here because it lost this trend line and it lost the zero line. If you want to be aggressive, you can just sell it. Otherwise, just don't buy, right? But now we can do this anywhere on any time frame. So, but the key is it needs to be a trend. You can't like be like, okay, well, there's 2 peaks below the zero line, so let's just kind of use this one instead. No, like it actually needs to be a trend. Like and this is probably not as good because it's not very deep. So if you do it here, like this, it's not that it's not going to work. Hold on. We're going to have to spread it out a little bit. If I could extend the line, I've got it with an arrow right now, but you can sort of see these when you practice. You don't necessarily have to draw them. It does not have to be exact. But you can see, remember, it's got to break the line and it's got to break the zero line. The problem when they're this steep is it's going to break the line often far before it breaks the zero line. Now this time it might work perfectly. Let me see. It might be okay. Nope. See how it bounces off the zero line? Right? So if you were waiting for the trend break, it looks like the trend broke, but the zero line held, right? You're going to get a lot of those if you use the really, really steep ones. I prefer them to be like just slightly trending, and I don't like shorting this ever. I just let this go, right? Now, it probably still works. So this is the first one this is the lowest one, this is the next one. They're both under the zero line. It loses the trend line and loses the zero line. If I get a short here, it's technically valid. I don't know if it works or not. They recover. So see, there's no short signal. And not surprisingly, they recover it. There's no short signal here. Okay, and you can see that we're nowhere near the trend line. And so now we're kind of like in the weeds. It's like, okay, wait, do I move this? Right? Like that's where this gets tricky, is like I don't have all the rules for that. I just don't mess with these moves if they do this. I want them to be like a regular, not a squeeze, like a regular trend. But technically it would be right here is where I would start thinking don't buy anymore. Let's see if that works. Yeah. See that? So this trade gets filtered out, right? Because it got underneath my trend line and it got underneath the zero line and they didn't immediately reject it. We're now trying to regain the zero line. That's the worst place to take a trap. Now it does not set up as a trap on the 24 tick, but it does set up as that purple bar, green bar again. This might have been where we started actually, 9:40. It must have been last Thursday. That's why I didn't get there. I believe this is where we started the video. So here's another way you could filter this, right? Now look on the 24 tick, hold on. If you do the same thing, it still works, but you're going to have more of these scenarios where it's so steep. Oh, this one, yeah, no, it's still good. So this one would be lowest to next lowest. So it's so steep that at the time being, it looks pretty safe, right? So it might not immediately drop, but really you don't have any forewarning that it's bearish until it breaks the zero line as well. So on the 24 tick, if you do it on the 24 tick, you're not going to get out of this one. You'll get out of the one that comes after that, Like if it drops on this, you won't buy that. But what you won't miss is if you're using the 40 tick to make decisions, you're not going to accidentally buy like in here. Because you know the 24 tick is already broken down, right? And so, no, I mean, I guess it's broken down here too. But there's conditions where the higher time frame will not confirm yet, but the smaller one did. So if you're trading the 24 tick like we are in the trading perform room, use the 15 tick for the volume zone oscillator, and then your trade entries should be on the 24 tick. If you're not using the algo and you just want to try this with your own setups, just make sure the size makes sense, right? You don't want to risk a lot based on a small time frame trend change. But so here's the other way, right? So like let's try this here. Here's what happens when you get these big drops and you're like, okay, when can I fight this, right? Well, what's the highest peak? It's right here. Is the next highest peak also above the zero line? Yes. So I can draw the trend line here, and that's probably going to be resistance. And then if they get under the zero line, they have to break above that and the zero line before I even think about buying. Right there. So there is the first opportunity to start looking for trades. Is it pink? No. Right? So I'm not immediately buying it, and that might be a mistake, but I'm going to stop being short because now buyers are starting to get some aggression. Now, if I look at the Weiss waves, you don't know yet that buyers are getting aggressive, but what I started to notice is even back here, see how close those are compared to, oh, I can't move it like that, compared to this one and whatever this one was trying to do. That was like more than an average bar length away. Or like if you're trying to overtake that, like that's going to take a long time, more than just one bar. Whereas this one, you can probably overtake in one bar. This one, you can probably overtake in maybe 3 bars, right? Start to kind of get a feel for how far they go from one bar to the next. So if you don't want to use another tool, that's the other way to think about this, is to basically just see like, do I have a reasonable distance to break this? And that way you could probably filter out some trades. Like if this was a trap, for instance, if this was a trap on something over here, or like a head and shoulders or something, and you're like, well, what are my, if the next bar is green, what's the chances that it overtakes this big gray wave? Not very good, right? It's got way more than halfway to go. So most likely, even if this goes up one and it's pink, it's just gonna roll over, and that's exactly what it does. Setting up for a short, and then this one though, when you looked here, it was like at the halfway point, or maybe even a little bit further. And so there's no pink bar here, but you can see that we're already encroaching on near the top. Oh, I got the number on that one. So we're getting there, right? It's not unthinkable that we might break that in this very wave. So if you want to wait for it to break, see here we didn't break it, right? So the Weiss wave did not confirm, even though the volume zone oscillator said don't be short. And they break down. Now, look what happened to the volume zone oscillator. It lost the zero line, right? So like I said, you don't, or if I didn't say it, I'll say it now. You don't want to use this as a trade entry by itself. Your trade entry should be price action based, like with the footprint or the algo or something. Don't just buy because the volume oscillator is getting over the trend line and getting over zero. What I'm saying is if it's done this and you get an entry, it's actually probably good to go. Now here, that was a trap, and my assumption would be that most of the time that trap will work, and this time it didn't, right? But most of the time it would. And if you waited for the Weiss wave, you'd have extra confirmation, but you'd miss some trades that were scups, right? So, oops, no. So it's just another tool. So now, once you know some of those things, right? So those are some examples of using volume to filter and add opportunities to be a little more aggressive. Like, so when should I, like, what are the entries, right? If you're using the algo, I can show you. So some of the entries you can look for. Let me make sure all my algos are printing now. My colors and stuff will be different. But once we get that volume zone oscillator, now this is especially true if it's also supernova, Okay, if you have supernova status on the 24 tick, and then you also get volume zone oscillator cooperating to the upside and breaking downtrends and breaking the zero line on the 15 tick, one of the really good setups is divergent dot with a star, or divergent dot that's followed by a triangle with a pink bar. That one is awesome and it works really good. If it's got, but it needs volume confirmation, right? So like in this case, you have bears with all the volume, and here if you drew the trend line, it would technically be here. You got over it, right? They didn't set up. They pulled back, and so now you probably wouldn't have a way to catch it because there's no good trend line. I suppose you could try to use this one. Let's see if that works. I'm actually not sure if that would work. It's got to get over the zero line one way or another, and so you'd miss it on this time frame. So if you use this, you wouldn't know till here, and I think that's way too late. So it does not always give the opportunity. So let's see. Yeah. So nothing there, but that's an example of had it given me the signal, I might have been able to take that trade. It didn't, so I just don't take it because I don't want to be overly aggressive. That's a good way to blow up, and I learned that the hard way. But let's see if we can find one the other way. Well, let's just see if another one sets up. So the other thing we can look for is, like I said, green bar followed by triangle after the volume is confirmed. Oh, let me just make sure the volume wasn't confirmed on the higher time frame. I'm curious. No. Nope. See, on the higher time frame, they rejected the zero line. See that? So, bearish. If they're looking the same, it's like trust it. All right. So here you got over the trend line from the few bumps and over the zero line, right? So by the time it gets there or so, you know that if you can get, oh, it missed it by one. And the star triangle, or the star with the triangle and followed by a pink bar, aren't as strong as the boxes with the pink bar or the dots, but they do often still work. But this one was one bar late, so the way you trade this is you buy a pullback into the star's range if they give it to you. You want it right away, like right there. It didn't quite do it, right? So that one's just a miss. But look, it's still bullish. So if it's set up again on a pullback, as long as that doesn't change. So there. Dot. If I get a pink bar, it's technically an entry. There. That's an entry. It's at resistance, though. Oh, I think we did this one already. Yeah. So you get a scalp. We did that one already. Let's go back further. We'll find another. You can try taking these on the 15 tick, by the way. It's not, they're not wrong. Okay, so we don't have dominance there. They sometimes work anyway, but I would recommend not just buying star pink bar with a triangle all the time. But this might work. So I don't know. Did we do this one already? Highest is way up here. So we're going to say it's either this one. That one seemed to have failed. So let's do this one here. Let's see if we can get above if we can get above that. I don't know if we do. Oh yeah, we do. So see how we get above it and we get above zero line? When does that happen? Right there. Too late. Yeah, we did that one. It's just too high. Green bar. Oh, this one's really close. It might work. So peak right here. We might have done this one too. Peak to peak. And what I want is to cross that and the zero line. Oh, this one doesn't quite make it. Unless there was a peak before this. Oh. It doesn't do it. Not till up here. It's not really clear until up here. Does it trigger up here? Green bar, pink bar. That's with the triangle. That's probably good from that earlier one. See how they rejected it here? But then over the zero line, and then now clearly over the trend line? Did they have that here? It was damn close. It was damn close. And that one works for like 100 points. It's not always that close. Sometimes it's if it sets up right, it won't be that close. We want it off support here like this. So okay, so there's a pullback, right? Peak. You can even use if you want to use this one, you can. I'd probably use the two highest, but okay, it's clearly bullish. If there was any question, the Weiss waves are higher. Volume oscillator got higher than the downtrend line, and they're holding above the zero line, right? So if you can find aggressive trades here during that time period, like divergent dot star, divergent dot star, divergent dot on the other direction followed by star even is pretty good. Those are all good entries. And then if we can get some pink bars with the algo behind it, as long as this still stays the case where all the momentum on the volume is going to the upside, I'm gonna stick with it. So let's see. See how they rejected the zero line after a little pullback? That's good. We have no indicators here. No signal. Other than just a pullback into this range. If you miss this one, you could get the pullback. But no signal there. Oh, there's one. Purple bar, star. Is that, are we still, yeah, we're good. So see how this is the biggest volume? Or the one that with all the dominance. And then if you wanted to do it this way, you draw that, and you'd see we're totally above it, and we're above the zero line. You can be aggressive. So that's probably good. It's not good for a lot, but good enough for a little something. Again, you got to use the bigger time frame too. We were coming right into the point of control. Might not want to take it if you're right into resistance, but the idea is still the same. Now, what about going the other way? Oh, you know what? I drew that wrong. It should be the first two. It doesn't actually. So look, I didn't draw that right. It should be this one connected to this one. I did it to this one. So here, you really don't get above it until here. So you just missed that, which is good. If you did it right. This one, oh, we lost it. See how they give back the zero line and the trend line? Don't take these traps. Just skip it. Skip these traps, in my opinion. They're not going to go anywhere because there's no volume dominance. Okay, let me back up a bit more. See if we can quick find one. I'm just trying to look at the volume zone oscillator and finding a here. So it's a pretty steep drop, but let's see if this works. So the highest one looks like this. That might not be very useful, but we'll try it. Let's see if we can extend that and find. So by the time it gets here, you know that volume is dominant. Now, you actually knew in the Weiss waves a little bit earlier this time, right here, right? So let's just use that because that works too. So the 15-tick Weiss wave got bigger than a 3-wave down wave. It's rare that one triggers first, but you can see this is a really big volume bar. So now let's see if we get a setup here. Do we get a pink bar after the green? You do. That's a great entry. Look at that. Cool, right? And just keeps going. And so the star pink bar with the triangle sometimes works too, but only if you have dominance to the upside. Here you did. This was the last real wave, and the last down wave was here. And then if you did it the other way, but at that point, right here, you're holding the zero line. I'm getting the wrong place. You're holding the zero line. Maybe you'd skip it if you did this, but I'd say it never really gave up the zero line yet. It's probably okay. Yeah, it's okay. So let's go further back. So my favorite are the POC over POC followed by pink at support or at the bottom of the radar, the channels, or divergent bar pink bar. So like even that's here. Did we do this already? It's like the same exact thing. So look how it just keeps setting up the same way. I don't think we did it already. So highest high, right at the top, and then the next one is right there. So we knew this is dominant, like here for sure. We get hard to see, but it's purple bar on the outside, followed by green bar, which is the same thing as a white box on Simon's. This is out of position. Very, very dangerous, right? We're way far away from the midpoint. So I'd probably wait for a pullback, but you could be aggressive and take the pink bar, I guess. But it's a breakout, right? But if you got a pullback here we go. Oh, look, we gave it up. See that? We gave it up. So now I'm, unless it bounces and gets back up above the zero line, I don't really want anything to do with this. I don't want this. I don't want this. I would skip this one, personally. I would not take that one. It does give you something, but I'd say I'd rather be short here, because volume zone oscillator is below the zero line, and it clearly rejected. Now it doesn't do much. The shorts don't necessarily work, and actually, this one did this did hold. Look at that. So, did it work on the bigger time frame? Oh, this one didn't have a really good counterpoint. This one never really got bullish. Did the Weiss wave get? No, the Weiss wave was bearish too. Oh, but not back here. Back here, the Weiss wave was bullish dominance, bullish dominance. So there, you didn't get it filtered out if you didn't worry about the volume zone oscillator. But if you use that extra filter, you might miss that trade, but it's not going to cost you anything. Let's back up a bit more. If you can tell that you like it, take it. But if you're questionable whether or not it's still good, it's a good way to double check. Let's see if I can find another one. Oh, that's as far back as I have loaded on this. See, that's not the pattern you want, where they're so far away. Because, see, by the time it gets over zero, it's like, it's nowhere near the trend line. So you have no bearing to where you're supposed to be. And I don't really have anything else to draw off of. So I have to wait for another one, is how I'm doing it. And now I can be bullish, which is just maybe a bar or two ahead of the Weiss waves. It's not a huge difference, right? So back here, so that tells me, let me put a line there. I can't go any further because I don't have any loaded bar. So oh wait, it's a little bit before that. Over the zero line, over the trend line, right here, right? I do not get the pink bar. I got the box. I don't have the pink bar on the triangle. So that didn't quite do it. But now, if we would have gotten a pullback and a trap, I'd be good. Let's see if we get it. Nope. And by this point, sellers took over dominance. And I would have drawn this and said, like, probably not. Because it's like rejecting. So I'd probably miss this one. I'd skip that one. And it doesn't really do much. And rolls over. Now we have a trap with purple bar, green bar. That's usually pretty good, right? So let's see. Do we have dominance here? We do not have Weiss wave dominance, right? And then here there's not. I don't really have anything to draw off of. There's this one. I guess I could go to the most recent one. And maybe in that case I could say it's good. Does it work? It does. So maybe if you use the peak and the most recent one above the zero line, it might be okay. When it doesn't give you a second peak right away, because this one already like extinguished. We already got over that and failed. So I'd normally think bearish, but perhaps you can reach over here, and as long as it's above the zero line, it might still work. That'd be cool. I actually don't. So here's one really steep, right? That's not over the zero line. Oh, they just. Okay, that one is. So let's see. I should be able to take this to this. Okay, under the zero. If they break the zero and they break that trend line right there. Well, that's exactly when the Weiss wave breaks too. But right here, I know it's not bearish, and there's just no setup. Oh, right there. It's a speed bar. So I'd probably wait for the pull. Here, I'll show you the speed bar setup if it does it. So the little diamonds inside the bar are speed bars. So when I get a pink bar with a triangle after it, if they can come back and bounce off that area, it's a good, here, right there. That's your entry. See how it pivots? Now, it might not do more than one, but we do have another one. See how there's another one right here? And a pink bar came after it. But look, we gave up the zero line and bears have control. So now I'm not, if it does try to bounce here on the, here, I would not take it. I would skip the long right. I'd probably skip that, honestly. Yeah, and I'm okay with that. I'm okay not being long here. Right? But look, it changes. Let's do it with the most recent one. Let's see if that works. Oh, I guess they're kind of lined up anyway. So the point where they both go over is here. So green bar, do I get pink? Pink, long. So I can skip all of this crummy stuff. Oops. I can skip all of this and not worry about missing this trap. And then get long here. It's a little higher of an entry, but anxiety-wise, I just hate this. And then you get stopped out by a tick and it runs. Like, I hate that shit. I'll be honest. It's really frustrating for me. And so I would rather filter them out and miss them sometimes and just know that on the smaller time frame, I have dominance. So now look what's cool on the 40 tick, right? If you're more of a swing trader, check this out. You can do the exact same thing on the, now we're gonna switch them. So now the 40 tick is going to signal us that that the direction is probably switching, but the the 40 tick is going to be the entry, and the 24 tick now is going to tell us that the direction might be switching. Do I have that other one drawn on the 15 tick? And then I'm going to go because I got stuff to do. But this should be at least enough to get people started, without hopefully getting too complex. So now the 24 ticks over here and the 40 ticks over here, right? So we're going to find a spot where we have dominance. Here, let me just back it up as far as I can go. Okay, so we're going to look for a spot where we have dominance to the upside and see if we can find a bigger rotation that way. So here's a high, a spike below that, and we got onto the zero line, right? So once we get over that trend line and over the zero line, we know buyers, oh, I can't, that's right, that buyers have control on this time frame, which happens right there. You can see on the Weiss wave, you might think that this looks like a pretty big wave. It technically was bull dominant, right? But you might, on the 24 tick, you might not notice, might think that's pretty big, but it's actually, this confirms it's fine. And then I would look here at the green bar. I guess do I have to turn that on? No. It's way back here. And I'd say, okay, if I get my setup here, I can take it. Now in this case, I got the algo, but I didn't get a pink bar to follow. The pink bar was late. So on that, if that's the only setup I was looking for is the pink on the triangle after a aggressive algo, I'd miss it. But yeah, it still did go significantly higher. It just didn't set up, right? Now, if I wanted to wait for the next signal, it would be purple bar, green bar, or purple bar, white box, POC over POC, right? And then that long would work. And then if they would trap off of that long, as long as bulls still stayed in control, which they are because of this and this, they would be a long as well, right? And then this is purple bar diamond. So that's just an engulfing bar basically. But when it's this bullish on the 40 tick and on the 24 tick, you can probably take that. And what I would do is I would look down at the 24 tick and say, well, did I have a setup here? Yes, purple bar, green bar, good to go, right? And I would expect it to go significantly higher because the 40 tick is also setting up. And it goes how much higher? At least 2 bars. It go on the 40 tick, 11.314. Doesn't look like much, but that's 11.363. So almost 40 points. So if I only wanted the ones that go 20 plus, we'll just make sure that everything sets up on 40 tick too, which I kind of showed before, but this is where that comes in handy. So here's another one. So here they didn't do it, right? Here they didn't do it. They didn't get over the zero line. So there's nothing to buy here. And on this time frame, I'd probably expect it to go lower, or at least go sideways. I would not have expected this. Hold on, let me see. Did I miss it? Oh, only if we can use that trick where we take the last one. Let's see. The last one over the zero line is this one. So I guess at this point, all we have to do is get over the zero line. So then that would mean this is where it starts being bullish. Oh, and then there's where the Weiss waves confirm too. So it's the same bar. So at this point, if we get a trigger on the 40 tick, we would think it's going another 40 points higher. It just doesn't. It doesn't trigger, and it doesn't go 40 points higher. That makes sense. Okay, let's see if we get another peak. Okay, cool. So we got the second peak above the 0 line. Draw that. Let's see if we can get over that trend line and stay over the 0 line. Close. Rejected off of it. That's not good. We don't want to see that. That's bad. That's bearish. Okay, there we go. Now, oh shoot, grabbed the wrong freaking thing. Oh my gosh. All right, so here, bulls are not in control based on the Weiss waves, but here we've gotten above the 0 line and above the downtrend line. Hopefully you can see that. I don't want to see too much. That's clearly it. So here I've got an, it moved it forward. I've got an X here, and the X's, when they're apexes, when they have are traps basically like this, they're good entries. If they're in the middle of a bunch of chop, they're not great. They don't work all the time, and they work better to the upside than the downside, but they're good entries usually. So all by themselves. As long as you have volume aggression. And actually where they work the best is where you had a shit ton of volume at the end. If this bar has the most volume, and if you draw the VPOC and all the volumes at the low, well, it's not exactly at the low, but it's near it. These work really well. But you can see, like, here's the one in reverse, right? And okay, so I would expect this one to work, and when it doesn't, the way I deal with that is now the apex that it makes right here. If I can develop volume below that, I'm going to assume we're bearish because this should have worked, and they got another like capitulation move. So I would assume that if we break this and then hold under it, I can start selling rips. But anyway, that's neither here nor there. Just another idea. This just goes higher. So the X by itself worked. Oh yeah, they just squeeze. Okay, that works. So that's fine. Is there one here? It never gets under the 0 line. That's kind of unfair. I mean, obviously, bulls are in control here. So let's find a place where it's actually useful. Here, maybe. So see how you can't really tell, like, oh, did it make it? Maybe not. Like, I can say, okay, well, we clearly had a trend line here. And so really what I want is to get above this. Oops, I don't know how to grab that. It's got too many lines in there. Really what I want is to get above that. And that would tell me right there. Now, we're pretty high on the indicator, so I doubt it'll set up. But technically that should go. Yeah. And it does. I'm not surprised it doesn't set up. We don't really have any setups that are breakouts, but I'm not surprised that worked. Because they did break beyond that trend line, and they were holding the 0 line really easily. So buyers were just in total control. So here, buyers in control based on the Weiss waves. We know to be aggressive now, so the dots followed by pink bars above their range usually gives you a lift. See these X's, how they work as like when they're at places where you think they might be resistance or support, you just sell them. As long as you have a reason to. Oh, here, this one kind of snuck up on me. Let's see if we had one here. High. Most recent high. Right there. Did we do this one already? No, that's perfect. Purple bar, green bar. I would buy that. I know it doesn't look like much of a pullback, but the fact that I've got confirmation that bulls are actually in control, you saw it on the Weiss wave too. You could be a little more aggressive here. This would be the example, unlike in the beginning of the video, where we saw this basically exact same thing, and it rolled over. Well, now we've got purple bar, green bar, or purple bar, POC above, or POC above POC, and a trap, but it's like at the top of the channel, right? And my coach Simon would probably say skip it, but I've got good reason to think this actually goes higher, and I've got a trigger on the 40 tick, so I'm probably gonna take it. And it goes higher, right? Is it aggressive? Yeah, but like if I'm picking my spots, it should be okay. Like here, that normally if buyers were aggressive, we would expect this to work more often than not, right? That by itself is pretty strong, and it does not work. So you are going to get some stops, but if you look at volume zone oscillator, you had no reason, you had no peaks or anything to draw off of here. You had no sign, like it's just continuing aggression. This is just pre-market before like a release of Econ. This is not what you want it to look like. You want it to have peaks and then get down and then rip. So that protects me from just buying every one of these. Is what I'm trying to say. Because yeah, you could say buyers have control, but they're not doing anything, right now. So this is all data. We'll do one more. Oh shoot, it's getting late. Okay, so let's get through the data. I don't want to do that. We might have already done these. I think we've done all the ones I've loaded basically. So oops. So here's this. Right there. Right there. Nothing on the 40 tick. No setup. Oh, wait. We're going to get it. Right there. Purple bar, green bar. Oh, man. They gave it up. Probably not taking that. That's too bad. They gave it up. See that? Oh, we did do this one. This where it gets choppy? Oh, maybe not. It's up a second time, though. See, this one is good. Back up above it. Now we're good. So this one, yes. This one, no. Hopefully that makes sense. I did that kind of fast. So here I was drawing off of this one. Right? We got up and they didn't trigger. And then it fell back down and I said they did not make it back above the zero line or this. And if you move this, if you want to use the most recent one, they clearly did not make it over that, right? Well, now, so you don't buy it. And now, if you use, I mean, either one, you're above the zero line end here. I guess you can't use this one or that one. But if you use this and any other one, you're above the zero line and you're above the what is basically a downtrend line. I don't have that quite right. There. If you use this one, it's just like a straight line. See that? So you'd have to do that, or what I meant is this. You're clearly above that one. You're not above this one. But that's pretty strict. But you did jump back above the zero line. You do not have volume dominance on the Weiss waves. But look how close you are to it. Here, let me zoom in. This is what I was talking about before. See how small that wave is at this point when you get the signal? That's not hard to overcome. You need like one more bar. So in my opinion, that is close enough. And you can, if you can see that, you probably don't even need to draw on the volume zone oscillator. Just wait till you see this, where like you've overtaken more than half the bar, and basically all you need is another bar. Well, you're probably good. It's not going to take much to push that higher. And if you've got the setup on the 40 tick, you're looking at a big move. So it's worth it, in my opinion, to be a little aggressive there. So here's another one. Did we have one here? See, this does not look great to me. I don't like this. I don't like this so much. We're above the zero line, but like this is usually not so sustainable. I don't know if this works. It does get right back up to the top, and then it probably rolls. Or maybe not, because look, it made another. If it can make it over that, it's good. No, pretty much it rejects. Ooh, that's sneaky. Hopefully they don't have a setup here, because that would have stopped. No setup, thankfully. But I mean, you got to look at this. Like, don't buy that. You know what I mean? Like, there's no reason to do that. And then they're gonna reject it. Now you can do this exact same exercise in the bottoms. You can say, oh wait, I want it under. They need to be under the zero line. So if I can get some under the zero line, a spike under the zero line, like that, and then draw it to the next spike. Oh, well, or we're just going to dump. That's too bad. Let's do one bear. Okay, so if we draw from this one down here to this one up here, and we got up to here, and then they fell down, and they set up, that would be a bear. They didn't do that, so it's bullish. And traps are probably going to be, look, all the volumes to the upside. If this would have been the right setup, I'd take it. And if that setup on the 40 tick, which it did not. Not really. Yeah, there's no real peaks there to use. There we go. Can I use these? We got to get a peak that's a higher low right there, and then they got to get over the zero line, and then we can measure it. So let's just wait till they do it in the interest of time. There we go. So low, higher lows. They've gotten above the downtrend line, right? Am I drawing that on the right side? I'm not drawing that on the right side. It's, let's see. Yeah, I am. They bounce off of it. And they cross the 0 line. I suppose, yeah, I don't know how else to draw that other than maybe here. Right? And so now I would say if they can, oh, they don't hold it, and no setup. So. Oh wait, we're looking for bears. I forgot. Oh, I'm so confused. Okay, so you would need to get under that to get bearish, right? We need to get under this to be bearish, and see how we're not under it. So we shouldn't be bearish. We should be looking for bull moves now. It's confusing because it's bullish divergence, but yeah, that is another way to think about it. If there's no bear, if there's no way you can make a bear move, they can't break down below it, and then they instead go above the 0 line. That's probably good too, right there. Star, pink bar, probably going higher. Oh no, I'm wrong. I am wrong. Maybe you can't do it that way. Wow, they just all the down moves are just like killer. They just okay. So here we'll do it like this: low, higher low, right? Get below the 0 line, get below the trend line. It's technically bearish, right there. There we go. Now, oh, we just missed it. Pink bar box, we just missed it. Let's see if they retest. Nope. Literally missed it by 1 bar. Oh, I think. Oh, maybe not. Look. This one formed at 11,440. Yeah, you needed to get to 11,440. It's right there. No, that's good. So you could take this if you're willing to short that. That would suggest that it's breaking down. I was doing it backwards. It doesn't work backwards. So here, let me try another short. Okay, does that? It's got to be above and then fall below. But we need spikes to the downside. That's the thing. And see, it just doesn't break down like that very often. It does it to the upside a lot. Okay, there. It's got to go back up again. So you could I guess you could say if I break below that, it's bearish, but you're gonna enter the trend. See, yeah, it never really does it. So that one doesn't really work out. I'm thinking it means it needs at least another bounce. But I bet if we draw this on the next peak, we can probably find the entry. Let me see. Do we get another down peak, or does it just... There. Okay, let's see if this one works. We need 2 peaks to the downside. Wow, that's really low. That sucks. So it did technically trigger here. Right there. Way too late. It's just too low. Yeah. We need a better... The breakdowns need to happen with big spikes from the top. And they just don't usually do that. I'm using this for long only mostly. I'm not seeing a lot going the other direction. Here, this one might work. It's got to be below the 0 line. This might work. Right there. Where is that? Right there. Is this? Yeah, pink bar, orange bar. That should work. There we go. So when they do it, it works. It's just, it doesn't set up very often like that to the downside. It does it to the upside a lot. Like this, you can find these spikes to the upside. They're supposed to be above the 0 line, but you can find those a lot. But what you really need is spikes below the 0 line that are in the middle. Or at least the second one's in the middle. See, like this one, and then if it does another one in the middle, we can do it. Yeah, okay, this might work. So uptrend. It's got to get below that trend line and be below the 0 line to break down. This should work. That's what you want. So no break right there. So by that point, look where the trend line is, right at the 0 line. This breakdown, if it triggers on the 40 tick, should be a good sell. Speed bar, If you get a pink bar, that area can be sold on a retest. No pink bar, wait. Pink bar, star, short. I would short it. Wait, let me make sure. Did we stay on a zero line? We did, and we're under the trend line, right? I'm pretty sure it's a short. Oh, they give us one more. This happens, right? Sometimes you get a stop, and then this one's probably good. Pink bar, diamond. It still is underneath. So again, the Weiss waves, it's not super clear who's in control. Looks like maybe bears are in control. I'm sorry, it looks like bulls are in control. But based on this, and I've got an X up here too. So this is probably the high. Yeah. Kind of neat. So yeah, you're very welcome. I do need to go though, but this was fun. I hope you guys learned something. I think that the big takeaways here is just be aware that like the volume dominance, you have to use a little if you're just going to use the Weiss waves, you have to use a little bit of be a little flexible because sometimes it's going to be late, but it's still going to work. And if you want some extra notification or an extra filter, you can try the volume zone oscillator. I've been using it and I like it, but just don't overuse it, obviously. But then the other real key is once you know that it's bullish and the momentum is strong, those 2-bar combos, the purple bar star, purple bar POC over POC, and then algo followed by pink bar, as long as you're not right into resistance, and as long as the momentum is strong, you can get scalps. But like I said, what I would recommend is make sure that you're considering the time frame that you're finding these under, because when they trigger on the 40 tick, they can be huge roll downs, right? But if the trigger is on the 24 tick, it's not always going to be that big. And certainly if the trigger's on the 15 tick, it might only be like a 10-point trade. But it's still useful. You just have to be aware of what time frame you're trading and what time frame you're using to find your dominance. So that's all I got. I will see you guys next time. Bye-bye. Here's how I get in contact with me, and if you want to follow me on Twitter, it's @Red.